It seems like everywhere you look these days, it's all about the ups and downs of the stock market and the unpredictable world of crypto.
Yeah.
But amidst all that, there's something else that's been quietly but steadily making some really big gains: gold.
Right.
And the thing is, this isn't just a recent spike, a reaction to what's happening in the world right now.
Mm-hmm.
Gold has actually been in a bull market for the past decade,
Yeah, for sure.
with central banks around the world buying up huge amounts.
Exactly. And that's a really important point
Yeah.
because while recent events have certainly brought gold into the spotlight even more,
Yeah.
its strength has been building for a long time now.
So for today's deep dive, we're going to dig into some fascinating insights from Alan Hibbard, who's a specialist in precious metals.
Okay. Sounds good.
And we've got transcripts from a couple of his YouTube discussions that you've curated for us.
Yep.
One is all about why silver could be the next big mover after gold's, impressive 10-year run.
Mm-hmm.
And the other one, well, it is titled USA's Silver Stockpile is Gone. Expert says it's better than gold. Mike Maloney.
Catchy title.
It is, yeah.
Yeah.
So we're going to explore both of those and really try to understand what's going on in the precious metals market right now.
Exactly.
And especially the relationship between gold and silver, because silver seems like it's, kind of coiled up, ready to spring.
Like a coiled spring, yeah.
Exactly.
And I think that's what we want to do today is, like you said, look beyond the day-to-day noise and headlines and
Right.
really identify the fundamental forces at play.
Okay, so let's start with gold.
Okay?
10 years of growth. That's pretty impressive.
It is.
So what are the main reasons behind this sustained upward trend?
Well, like you mentioned, Hibbard points to a few key factors.
Mm-hmm.
Strong central bank demand, continued concerns about inflation. We've seen tariffs and trade wars
Yeah.
and of course, ongoing geopolitical tensions.
Right. It seems like it's this whole combination of things all pushing in the same direction.
Mhm. Absolutely. It's a powerful mix. And, these factors are often interconnected. For
Right.
example, geopolitical instability and trade disputes. Those can definitely fuel inflation.
Makes sense.
And then in times of uncertainty, central banks, well, they tend to turn to gold as a safe haven,
Right.
a store of value, something reliable,
Yeah.
which of course further increases demand.
So it's like a self-reinforcing cycle in a way.
It can be, yeah. And underpinning all of this is the simple fact that the physical supply of gold is limited.
Right.
We can trade paper gold all day long, but the actual amount of physical gold in the world is finite.
And that scarcity just adds to its allure, I guess.
Exactly.
Now, Hibbard also talks about this idea of capital rotation, which I
Yeah.
find really interesting.
Yeah.
He's saying that we've seen this long period where riskier assets like, tech stocks
Mm-hmm.
have really outperformed.
Mm-hmm.
But now there's this potential shift happening
All right.
where investors are starting to move towards safer havens like gold. And he points to these ratios, like the Dow to gold ratio, the S&P to gold ratio, and the NASDAQ to gold ratio.
Yeah, those are important indicators.
So for our listeners who might not be familiar with these ratios, can you explain what they tell us?
Sure. Think of it like this. These ratios are basically a way of measuring the relative price of stocks compared to gold over time.
Okay.
So when these ratios are high, it means that stocks are expensive compared to gold,
Okay.
historically speaking. And when they're low, well, it suggests that gold is relatively cheap.
Got it.
And Hibbard is pointing out that these ratios are currently quite high, which suggests
That stocks are maybe overvalued.
potentially, yeah.
Interesting.
And this idea of a reversion to the mean, it implies that these ratios tend to move back towards their historical averages over time.
Okay, so they don't just keep going up indefinitely,
Right.
kind of swing back and forth.
Exactly. And in the current context, this reversion to the mean, well, it suggests that gold is likely to outperform the stock market in the coming years.
So that's a pretty significant takeaway right there.
It is, yeah.
That gold could actually do better than stocks for the next few years.
Potentially, yeah.
Wow. Okay, so that's gold. But then the conversation shifts to silver.
Right.
And that's where things get really interesting.
Silver's got its own story to tell.
It does. And Hibbert says that silver usually follows gold's lead, but with much bigger price swings.
Yeah, it tends to amplify gold's moves.
And he even uses this analogy of a coiled spring.
He does, yeah.
Because silver is currently below its all-time high. It needs to go up about 50% to reach that previous peak.
Right.
So it's like it's got all this pent-up potential energy just waiting to be released.
Exactly, and that's what makes it so compelling.
So why does silver have this potential to make these huge moves?
Well, one reason is that it's not just a precious metal, it's also an industrial commodity.
Oh, I see.
So it's got this dual role, which makes it more sensitive to changes in both the investment world and the industrial world.
Okay.
And when gold prices move, silver tends to react even more strongly, both upwards and downwards.
So it's like a leveraged play on gold in a way.
You could think of it that way, yeah.
Interesting.
And as you mentioned, silver hasn't yet hit a new all-time high like gold has.
Right.
So there's definitely room for it to run.
To paint a picture of this potential hybrid brings up the 1970s bull market.
Ah, yes, a classic example.
Gold saw an incredible 25-fold increase during that time.
Yeah, astronomical gains.
But silver's returns were even more dramatic,
They were, yeah.
potentially around 36 times.
It's hard to even fathom.
It is. It's amazing.
Yeah, the 1970s were a unique period, though.
Yeah.
High inflation, lots of monetary instability.
Right.
Created a very favorable environment for precious metals.
So are you saying that we might see something similar happen again?
Well, it's difficult to predict the future,
Of course.
but that historical episode shows just how much silver can outperform gold during a strong bull market.
Okay, so we've talked about gold, we've talked about silver now. What about cryptocurrencies like Bitcoin?
Right. Well, Hibbert touches on this comparison too.
Yeah.
And he makes a distinction between Bitcoin and other cryptocurrencies.
Interesting.
He calls Bitcoin digital gold.
Digital gold.
Yeah, because of its decentralized nature and finite supply.
Okay.
Whereas he sees many other cryptocurrencies as more like arcade tokens.
Oh, wow.
Yeah, basically speculative assets without the same fundamental characteristics as gold or Bitcoin.
So he's saying that Bitcoin is more like gold in a way.
In terms of its underlying properties, yes.
Okay, so for our listeners who are interested in both precious metals and crypto,
Yeah.
what's the key takeaway here?
Well, I think the important thing is to understand the fundamental differences.
Yeah.
Bitcoin, with its fixed supply and decentralized structure,
Right.
it shares some of the key attributes that make gold attractive
Okay.
as a store of value and a hedge against inflation.
So if someone believes in gold as an investment,
Yeah.
they might also see value in Bitcoin.
Exactly.
Or, of course, there's also a big difference in volatility.
Absolutely. Bitcoin is much more volatile than gold.
Yeah.
I mean, it's a much younger asset.
Right.
Still in its early stages.
Whereas gold has been around for centuries.
Exactly. It's been a store of value for millennia.
Right, so it's much more stable.
Yeah. And Hibbard suggests considering both as part of a diversified portfolio
Okay.
with the allocation depending on your individual risk tolerance.
That makes sense. So it's not necessarily in either situation.
Exactly.
Okay, so let's get back to silver now, and this really intriguing idea that it might actually be better than gold,
Okay.
as one of the video titles suggests.
Yeah. Bold statement.
It is. So what makes silver potentially even more attractive than gold?
Well, Hibbard lays out a compelling case.
Okay.
And a big part of it has to do with this idea that silver is undervalued
Okay.
and that it's like a spring being compressed, just waiting to explode.
So what are the key arguments supporting this view?
Well, one major difference between gold and silver is that silver doesn't have these massive central bank stockpiles
Okay.
that can be used to manipulate or control the price. You know, gold has this sort of lender of last resort.
Right, central banks.
Exactly. They can lease gold into the market if they want to dampen price increases.
So they can kind of put a lid on things.
To some extent, yes, but with silver, it's different.
How so?
Well, the U.S. Strategic Reserve of silver, it's basically gone.
Really?
Yeah, it was depleted back in 1981.
Wow. So there's no silver stockpile that the government can just release into the market.
Not really. No.
So what happens when demand for silver really starts to pick up?
That's the key question, right?
Yeah.
Without that artificial supply from central banks acting as a ceiling, well, the price can potentially skyrocket.
Like a moonshot.
Exactly. And that's a big part of the better than gold argument for silver.
It's like it's got more room to run.
Exactly.
Now, there's also this whole discussion about potential short squeeze in the silver market.
Yeah, that's a fascinating aspect.
Hibbert shows a chart that shows a huge increase in short positions in a silver ETF.
Right. A lot of people betting that the price of silver will go down.
So for our listeners who maybe aren't familiar with short selling, can you explain how that works?
Sure. So short selling is basically when you borrow shares of an asset
Okay.
and then sell them on the open market, hoping to buy them back later at a lower price.
Okay.
So you're essentially betting that the price will go down.
So if the price goes down, they make money, but if it goes up,
They lose money.
right.
And the more the price goes up, the more they lose.
Got it.
And when a lot of people are shorting an asset, like we're seeing in silver,
Yeah.
it creates the conditions for a potential short squeeze.
And what exactly is a short squeeze?
Well, imagine this. The price of silver starts to rise.
Okay.
And all those people who are short silver, they start losing money.
Yeah.
And as the price keeps going up, their losses get bigger and bigger.
Right.
And at some point, they might panic and decide to cut their losses.
Okay.
And to do that, they have to buy back the silver that they borrowed and sold.
So they're buying silver to cover their losses.
Exactly. And all that buying pressure, it pushes the price up even further.
So it's like a chain reaction.
Yeah. And it can get out of control very quickly.
And this is what's known as a short squeeze.
Exactly.
Wow. Okay, so that's a short squeeze. And Hibbert is saying this could happen in the silver market.
He's suggesting it's a real possibility. Yeah.
Okay, and to back up this idea, he brings up Robert Goddell,
Right.
who used to work at J.P. Morgan,
Yeah.
the big bullion bank.
Exactly.
And Goddell says that the silver market is in major dislocation territory.
Yeah. A very strong statement.
It is, and he says there's no quick fix.
Hmm.
He even mentions that the implied lease rate for silver for 1 week was over 10%.
Wow, that's astronomical.
What does it tell us?
It means that people are desperate to get their hands on physical silver.
Okay.
They're willing to pay a huge premium to borrow it.
Wow, so that's another sign that the market is really tight.
Absolutely.
Okay, so we've got this potential short squeeze. We've got this expert saying the market is in major dislocation.
Right.
What else is Hibbert pointing to?
Well, he also talks about how silver inventories are moving from London to New York.
Interesting.
And he compares this to what happened with gold in the past.
Okay, so what's the significance of this movement of silver?
Well, it suggests that there's a shift happening
In what way?
in where physical silver is being stored and traded. You know, the LBMA in London, it's
Yeah.
one of the main global hubs for precious metals trading.
Right.
And COMEX in New York is another one.
Okay.
And the fact that silver is flowing from London to New York, well, could mean that demand is increasing in the U.S.
Hmm.
or that there are concerns about supply in London.
Okay.
You know, there are a lot of possible explanations.
And this connects to the idea of free-floating or registered silver inventory,
Right.
which is basically the silver that's immediately available for sale.
Exactly.
And Hibbert mentions that there's been a huge depletion of this registered silver in London.
Yeah, around 33% year to date.
Wow, that's a lot.
It is, and it suggests that the supply of readily available silver is shrinking.
So that supports the idea that we could see a supply squeeze.
It definitely does.
Okay, and then there's this really interesting observation about the New York Overnight Silver Index.
Yeah, this is where things get a bit mysterious.
It does. So what's going on with this overnight index?
Well, it's significantly higher than the regular New York silver open price.
Okay.
Basically, the price of silver would be much higher if it only traded when the COMEX is closed.
So like during the overnight hours?
Exactly.
That's strange.
It is, and it suggests that something is happening during regular trading hours.
Like what?
Well, some people believe that the price of silver is being suppressed.
Suppressed?
Yeah, kept artificially low.
But why would someone want to do that?
Well, there are a lot of theories.
Okay.
But we won't get into that here.
Fair enough.
But the point is that this divergence between the overnight index and the regular price,
Yeah.
it adds to the mystery and intrigue surrounding the silver market.
It definitely does, and it also might explain why silver is flowing from London to New York. Maybe they need more silver in New York to keep the price down during trading hours.
It's a possibility.
Now, Hibbert even shows a hypothetical price of silver reaching $382 per ounce.
Yeah, if it only traded overnight.
Right. That's way above the current price.
It is, but it's interesting to note that this hypothetical price is in line with what some experts are predicting.
Oh, really?
Yeah, Hibbert mentions Eric Sprott,
Okay.
a well-known investor in precious metals.
Yeah?
And Sprott recently said that he expects silver to reach somewhere between $250 and $500 per ounce.
Wow.
So the idea of triple-digit silver prices, it's not just a fringe theory.
No, it seems like there's a growing consensus that silver is headed much higher.
Yeah, the momentum is building.
And then finally, they discuss the gold-silver ratio.
Ah, yes, a key indicator.
So what is the gold-silver ratio, and what does it tell us?
Well, it's basically a measure of how many ounces of silver it takes to buy 1 ounce of gold.
Okay.
So right now, the ratio is around 88 to 90,
Okay.
which means that you need 88 to 90 ounces of silver to buy 1 ounce of gold.
Got it.
And historically speaking, this is a very high ratio.
Okay.
I mean, if you look at the data going back over 340 years.
Yeah.
Silver has only been this undervalued relative to gold for a tiny fraction of that time,
Wow.
like less than 1%.
Really?
Yeah, only about 3 years out of 339.
So this is a very rare occurrence.
Extremely rare.
And Hibbard and his guest, they frame this as a once in 16 lifetimes opportunity.
Yeah, it's a powerful way to put it.
It is, so to sum up the core argument here is that silver isn't just going to follow gold higher.
Right.
It has the potential to actually do much better than gold
Exactly, to be better than gold.
because of its unique supply and demand dynamics,
Right.
the lack of those price-controlling stockpiles,
Mm-hmm.
and the possibility of a massive short squeeze.
It's a compelling case.
It is. So for our listeners, what are the key takeaways from this deep dive into the world of precious metals?
Okay, well, first of all, gold has been in a bull market for a decade.
Right.
Driven by strong fundamentals, and that bull market is likely to continue. Second, silver historically amplifies gold's movements.
Yeah.
And right now, it appears to be significantly undervalued.
So there's a lot of potential upside.
Exactly. And that potential is fueled by tight supply,
Right.
the lack of price-managing stockpiles,
Yeah.
and the possibility of a short squeeze.
And then there's that historically extreme gold-silver ratio,
Right.
which suggests that silver is incredibly cheap relative to gold.
Yeah. Potentially a once-in-a-lifetime opportunity.
Wow. So given all of this historical rarity of the gold-silver ratio
Mm-hmm.
and all these signs pointing towards a potential silver supply squeeze,
Yeah.
what does this mean for our listeners?
That's the big question, isn't it?
It is.
It really challenges us to rethink our understanding of value and diversification.
Yeah.
You know, we're so used to thinking about stocks and bonds and real estate, but
Right.
what about precious metals?
Mm.
They've been a store of value for thousands of years,
Yeah.
and they might play an even more important role in the years to come.
Especially with all the uncertainty in the world today.
Exactly.
So we encourage you, our listener,
Yes.
to really think about what you've heard today,
Mm-hmm.
to look at the historical data,
Yeah.
to consider the expert opinions,
Right.
and to ask yourself, how do precious metals fit into my overall investment strategy?
It's a question worth pondering,
It is.
especially in these interesting times.
Absolutely.